This vote just changed XRP forever, and 99% of people still have no idea what's coming. It happened at 10:30 this morning in room 538 of the Dirksen Senate Office Building. The Senate Banking Committee opened the markup session that the XRP community has been waiting 4 months to see. Over 130 Democratic amendments had been filed in the days leading up to it. Senator Elizabeth Warren proposed wiping entire sections of the bill out of existence. Senator Jack Reed filed 18 separate amendments of his own. Senator Chris Van Hollen pushed a provision designed to prohibit the president and senior officials from holding any affiliation with digital asset businesses. The opening hours of the session looked like a coalition stretched thin, holding together under procedural pressure, with the outcome genuinely uncertain to the people inside the room. And then the vote happened. 15-9, 2 Democrats crossed the aisle. The Clarity Act cleared its first federal gate. Tonight, I'm going to walk you through every layer of what just happened. I'm going to show you why the bipartisan margin matters more than the passage itself. I'm going to explain how the Trump administration's 14-month architecture was specifically designed to produce this moment. I'm going to map the exact legislative calendar from today through July 4th. And I'm going to break down the institutional cascade that follows committee passage, mechanism by mechanism, all the way to the price targets that emerge across every scenario through the end of 2026. Before I continue, this is not financial advice. I'm sharing publicly available information for educational purposes only. Always do your own research and consult a qualified financial professional before making any investment decisions. Now let's begin. The first thing to understand about today's vote is the structural significance of the bipartisan margin. If this had been a 13-11 party line passage, the bill would have advanced. But the path to the full Senate floor would have remained theoretical. 60 votes are required for cloture. 53 Republicans on their own cannot reach that threshold. The argument that at least some Democrats can support this legislation had to move from theoretical to evidence-based before the floor vote could be scheduled with any confidence. Today, 2 Democrats crossed over. That is the proof of concept. The argument is no longer hypothetical. It is documented in the committee vote record. Senator John Kennedy of Louisiana was the final procedural uncertainty going into this morning. His hesitation had been the open variable in the count for weeks. He committed his support on May 13th. Polymarket odds for full 2026 passage jumped from 62% to 73% on his commitment alone. After today's clearance, those odds should move higher again as the specific bottleneck that blocked the bill for 4 months is now removed from the procedural calculation. Chairman Tim Scott executed a last-minute maneuver to secure the bipartisan margin. Cody Carbone at the Digital Chamber told reporters that an ethics provision deal is likely to be completed before the bill goes to the floor, because Senate leadership will only bring it to a floor vote when they are confident they have the 60. Senator Kirsten Gillibrand has indicated an August timeline. Brad Garlinghouse and the broader institutional coalition expect the 60-vote path to be achievable before that window closes. The gate is open, the floor fight is next, and the floor fight has a cleaner path tonight than it did this morning. Now I want to take you through the architecture that made today possible, because the connection between Trump's policy framework and this committee vote is more precise than any single executive order suggests. The administration spent 14 months building a system in 5 layers, and those layers were designed to operate in sequence, not simultaneously. The first layer was the January 20th executive order establishing American leadership in digital financial technology. That order reversed the Biden-era guidance that had restricted banks from engaging with crypto. It directed every federal agency to remove barriers. It created the working group that led to the strategic reserve. And it established the political signal that this administration is moving, not deliberating. The second layer was the Strategic Reserve Executive Order in March of 2025, the one that named XRP alongside Bitcoin, Ethereum, Solana, and Cardano for inclusion in the US digital asset stockpile. That naming gave XRP sovereign-level legitimacy that no analyst prediction could replicate. And the market response was immediate. XRP surged 33% in 24 hours, outperforming Bitcoin's 11% and Ethereum's 13% in the same window. That move was the market's first acknowledgement that XRP had been institutionally distinguished at the federal level. The third layer was the Genius Act signed July 18th of 2025. The stablecoin market grew 49% to $306 billion in the months that followed. RLUSD launched within the new statutory framework. BNY Mellon took on custody of RLUSD. 1 in 6 Americans now holds crypto. The stablecoin infrastructure that the financial system needs to route digital payments through XRP rails was now legally established at the federal statutory level. The fourth layer was the Paul Atkins transformation of the SEC. The March 17th joint SEC and CFTC interpretive release explicitly named XRP as a digital commodity. The SAB 121 repeal opened every nationally chartered bank in America to crypto custody. Project Crypto's implementation infrastructure was announced and made ready to enforce the Clarity Act the moment it passed. Atkins said at the AI Plus Expo in May that the SEC is pursuing formal rulemaking for on-chain trading systems, and that the agency's job is to set the rules of the game, not to pick the winning team. That single sentence reframed the SEC's posture from adversary to administrator. The fifth layer is the Clarity Act itself, and today the Senate Banking Committee voted 15-9 to advance it. 5 layers? 14 months? All pointing at the same destination: the statutory certainty that converts XRP's institutional adoption story from evaluation mode into deployment mode. Trump did not say, buy XRP. His administration built the system in which the legal infrastructure for XRP's institutional adoption passes through a Senate committee with bipartisan support and advances toward a July 4th presidential signature on America's 250th birthday. And here is the part most people are not absorbing. Because the moment you understand what those 2 Democratic votes actually unlocked, you realize today wasn't the destination. It was the starting pistol. Now let me walk you through what happens at each stage of the remaining legislative path. Because the calendar from today through July 4th is the most important 60 days in XRP's history. Stage 1 is the committee passage that just happened. The immediate market signal is the cup and handle breakout above $1.50, targeting $1.65 to $1.80 based on the technical pattern that has been building since April 17th. The neckline held at $1.50. The bipartisan committee passage is the catalyst that breaks it. XRP is currently holding at $1.45, up 1.2% on the day, even in a broader market that saw Bitcoin slip below $80,000 and Bitcoin ETFs record $635 million in outflows on hot inflation data. XRP held its gains while the rest of the market bled. That relative strength during a broad market sell-off is the fingerprint of institutional buying with a directional thesis, not retail momentum chasing price. Stage 2 is the Senate floor vote in June. 60 votes required. 7 Democrats minimum beyond all 53 Republicans. Today's 15-9 committee vote, with 2 Democrats crossing, creates the evidence base for the 60-vote argument. The digital chamber says the ethics provision deal will be completed before the floor vote. Gillibrand's August timeline gives the vote a hard procedural deadline. If the bill clears 60 votes in June, the reconciliation process with the House version and the Senate Agriculture Committee version follows quickly. And the presidential signature by July 4th becomes the achievement Trump's White House has been targeting since the architecture began. Stage 3 is the presidential signature itself, followed by the subsequent 90-day operational window. The Clarity Act Section 106 requires the CFTC to adopt an expedited registration process within 90 days of enactment. That 90-day clock is the statutory timeline by which bank digital asset services become available without prior regulatory approval. The banks that have been waiting for the law are waiting for the 90-day window to open, not for the signing itself. A July 4th signature plus 90 days puts the full bank authorization timeline in early October of 2026. That October window is the one every XRP holder should be anchoring their price expectations to, not the committee passage today, which produces a 20% move, not the June Senate floor vote, which produces the inflow acceleration. October. When the statutory bank authorization makes XRP custody, settlement, and payment services standard banking operations for every nationally chartered institution in the United States. Now let me show you how the institutional cascade that follows each stage mechanically converts into price appreciation for XRP holders. The first mechanism is ETF inflow acceleration. Standard Chartered projects $4 to $8 billion in cumulative XRP ETF inflows by year-end if the Clarity Act passes. Today's committee passage is the event that starts the inflow acceleration clock. The 65% of 351 surveyed institutional investors who named regulatory clarity as their single stated condition for XRP allocation do not wait for the presidential signature. They begin their mandate amendment processes the moment the legislative trajectory is confirmed. Committee passage today confirms the trajectory. The mandate amendment process starts this week. Capital deployment follows in weeks to months, not quarters. The second mechanism is the BlackRock threshold crossing. Robbie Mitchnick, BlackRock's head of digital assets, confirmed the $3 billion AUM threshold as the firm's XRP ETF filing trigger. Standard Chartered's $4 to $8 billion inflow projection from today's event crosses that threshold as a mathematical consequence of the first wave of post-passage institutional inflows. When BlackRock files, their Aladdin platform's synchronized recommendation reaches $21 trillion in managed institutional assets and changes the risk conversation at every pension fund, endowment, and sovereign wealth fund from whether to allocate to what size to allocate. The compliance validation cascade converts one entrant into dozens over months. The third mechanism is the supply shock at $5 billion ETF AUM. When ETFs hold more XRP than all cryptocurrency exchanges combined, which happens at approximately $5 billion in total ETF assets, given exchange balances at $2.6 billion and $1.35 billion already in ETF custody. The price mechanism changes fundamentally. Prices are no longer set by exchange order books. They are set by what dormant holders require to release their tokens into a market that cannot satisfy demand through normal exchange liquidity. Dormant supply is concentrated at the $2 cost basis for the current cycle's peak buyers. That supply does not move until prices approach and exceed that range. The supply shock is the mechanism that takes the price from the $1.65 to $1.80 committee passage range through the $2.80 Standard Chartered near-term target and toward the $3 to $5 year-end consensus. The fourth mechanism is bank deployment, following the 90-day CFTC registration clock. Bank of America processes $680 billion in annual payment transactions. At just 5% deployed through Ripple's on-demand liquidity, transactional XRP demand from that single institution alone is measured in tens of billions annually. Section 401's bank authorization, which becomes operational 90 days after the presidential signature, removes the prior approval requirement for every U.S. bank to offer XRP custody, settlement, and payment services. When multiple major banks deploy simultaneously in October, the transactional demand layer adds to the ETF demand layer in a way that the exchange balance structure at that point, which will be even more compressed than it is today, cannot accommodate without significant price adjustment upward. Now let me be specific about what this means for the XRP holders who have been patient through the suppression. Whale wallets accumulated 1.15 billion XRP in April alone, while retail sold at $1.38. Santiment documented that the XRP ledger now has a record 332,230 wallets containing at least 10,000 XRP. Coinbase XRP trading volume fell 18% year over year, the lowest retail engagement since before the bull cycle that took XRP to $3.65 in July of 2025. And Goldman Sachs holds $153.8 million in XRP ETF positions, structured across 4 different issuers as a long-duration institutional strategy. The people who bought XRP at $1.38 when retail was selling, who accumulated through the flat months, who built the record number of 10,000 plus XRP wallets, are the people positioned at the beginning of the sequence that today's committee passage has just confirmed is real and advancing. Not approaching, advancing. The gate opened today. The people who waited for the committee passage to buy in are still early. The people who wait for the Senate floor vote in June are slightly less early. The people who wait for the presidential signature in July are less early still. And the people who wait for the media to confirm what happened and write the headline that says XRP is up significantly will be buying from the people who bought today. And in April, and in the months of suppressed sideways trading that preceded this moment, the supply is constrained, the demand is building, the legal architecture just cleared its first federal gate, and the price is still at $1.45 as the committee vote result settles into the market. Let me give you the investment calculator across the full scenario range. At $1.46, $1,000 buys you approximately 685 XRP. At $1.65 to $1.80, the immediate post-committee passage target range based on the cup and handle technical pattern. Those 685 tokens are worth $1,131 to $1,233. At $2.80, Standard Chartered's near-term institutional consensus and the first supply shock level, where dormant supply begins unlocking, they are worth $1,918. At $5, the lower bound of the full Senate passage, year-end consensus, and the beginning of the BlackRock entry scenario range, they are worth $3,425. At $8, Standard Chartered's upper scenario, where ETF inflows reach $10 billion, and the BlackRock Cascade compounds, they are worth $5,480. At $10, the supply shock scenario, where ETFs exceed exchange balances and transactional bank demand compounds on top of ETF demand, they are worth $6,850. At $20, the velocity model for the bank deployment cascade, where Section 401's 90-day window opens in October and multiple banks deploy simultaneously. They are worth $13,700. At $28, Standard Chartered's 2030 institutional adoption base case, they are worth $19,180. Scale those numbers to your own position size. At $5,000 invested, multiply every figure by 5. At $10,000, multiply by 10. At $25,000, multiply by 25. Now let me address something that needs to be said directly to the people watching tonight. The pattern that has repeated through every previous catalyst in this cycle is going to repeat through this one. People will wait for confirmation. They will wait for the Senate floor vote in June. They will wait for the presidential signature in July. They will wait for the price to break through $2 and confirm to them that the move is real. And by the time the confirmation arrives, the price they were waiting to enter at will be $3 behind them. This is the same pattern that produced the people in November of 2024 who were waiting for 50 cents and watched XRP run to $3.65 without ever buying. The pattern is psychological. The cure is structural. You either have core allocation in place before the catalysts hit, or you watch the catalysts unfold from outside the position. The institutional players inside the bill, inside the committee process, inside the architecture that Trump's administration spent 14 months building, are not waiting for retail confirmation. They are positioned. And today's vote is the signal that their positioning is being validated. Now zoom out and assemble the full sequence. The Senate Banking Committee voted 15-9, bipartisan, today. The first federal gate in the Clarity Act's path to becoming law has cleared. The digital chamber expects the ethics deal to close before the floor vote. The floor vote has an August deadline and a 60-vote path that two Democratic crossovers today made meaningfully more credible. The White House is targeting July 4th for the presidential signature on America's 250th birthday. Trump has pre-committed to sign immediately upon arrival. The CFTC has 90 days from signature to operationalize Section 106. Section 401's bank authorization opens in early October. ETF inflow projections from Standard Chartered are $4 to $8 billion by year end. BlackRock's $3 billion trigger is reached as a mathematical consequence of those projections. The supply shock activates at $5 billion in total ETF AUM. Bank transactional demand from Section 401 stacks on top of ETF demand in October. And the XRP holders who accumulated through the suppression, who built the record wallet growth, who dollar cost averaged while retail exited, are now sitting at $1.46, with the first legislative confirmation that the entire institutional adoption thesis is advancing through the actual legislative process, rather than just being predicted to advance through it. Trump did not say, buy XRP. He built the system in which today's vote was possible, where the July 4th signature is targeted, and where the 90-day bank authorization window opens in October. His architecture delivered today. The next 4 steps deliver what follows. The gate is open. The cascade begins. Macro storms pass. Infrastructure lasts. The institutions that have been quietly positioned for years are not waiting for retail to figure it out. They are not waiting for the headlines to catch up. They are not waiting for the social media consensus to confirm what their compliance departments have already approved. They are deploying into a window that the legislative process has just begun to open, and they will continue deploying through every subsequent stage of that legislative process, whether the broader public is watching or not. The headlines will arrive late. The price will arrive early, And the people who understood today will be the ones explaining it to everyone else tomorrow. Smash that like button right now if this video gave you the framework for understanding what just happened. This is the confirmation video your XRP friends need to see tonight. Drop your XRP price target for year-end 2026 in the comments now that the committee has passed. Let's build this community's consensus with real data, not speculation. Subscribe and hit the bell, because when the Senate floor vote is scheduled in June, when the 60 vote count becomes public, when BlackRock crosses the threshold, when the presidential signature lands on July 4th, and when Section 401's 90-day window opens in October, my breakdown drops within hours of each event. Today was the gate. Everything that follows is the path. You want to be subscribed for every step of it. See you on the other side.